Welcome traders. So this is my first weekly analysis of 2020 for the week commencing, Monday the 9th of January. So first of all, obviously the goal this year is to achieve consistent growth, consistent behavior with regards to our interactions with regards to the markets. And, there's a lot of signs that this year is going to be interesting no matter which way it goes, but there's also some good signs of some optimism or reasons to be optimistic as a trader. So without further ado, let's kick off starting with the economic calendar for this coming week. We can see here that, again, most of the sensitivity appears to be around fears of recession and the knock-on effect. And so really it pays to be paying attention, not so much with regards to trading around those events, but just kind of watching how the market reacts to certain news announcements. So this week, I'll be focusing on the Fed's Powell speaking about the US dollar, what their any fears of recession or how they feel their rate cuts are going. That's going to be a general approach. Then, of course, we have on Thursday, we've got CPI numbers coming out of the US. They're expected to be relatively decent. That's okay. We're looking for shock things, anything that's a big surprise. We have, and also on Friday, we've got GDP with regards to the UK. So that's really my focus going to be. Possibly also on Wednesday, if you're watching out for Aussie dollar, you want to see how CPI numbers are there. So we're really watching globally to see if there's any surprise numbers that could be implying that there's going to be, a big, that we're heading for, a massive winter with regards to recessions in particular countries or with major economies. That being said, it's possible we may not. We may already have had a bit of a correction. A lot of it could be tied to the COVID lockdowns and also to do with Russia invading Ukraine. And so, as well as an overheated market that really needed to have a correction. We appear to have had that correction in many ways. The beauty of today's video is that I'm going to be looking at the market through fresh eyes. So my analysis is, I've avoided looking at the markets for a couple of weeks. I've taken a break, and so I'm looking at it. So the analysis is real time in the sense that I'll be analyzing and drawing conclusions in real time. So that being said, let's go and have a look at the charts and see what's going on. And so we'll kick off. If anyone's interested, I'm using PROREALTIME 12. I'm a big fan of it. I'm using a broker independent analysis platform. If anyone wants to find out more about it, it is available in the links below. I'm enjoying it. So if people do ask me about it, and this is the platform I'm using. So I'm looking here at the dollar index, and what I do want to mention was Friday last week. So keeping in mind, today is the first day I'm actually looking at the markets, and you can just see how Friday's close was a very nice bearish rejection to the downside. You can see here on the weekly, it was underneath resistance. So the implication here is that we're going to see the market head a little bit further down. And when you look at the monthly, it actually makes sense. We've broken below this last previous high. The next level down for us is down towards the $100 mark. So it does actually make sense that it would certainly consider heading down to that. I would just kind of keep an eye on this area here, which we might find a little bit of kind of activity around. Once we break through that, I think the move is going to be pretty straightforward down to that. So look at euro dollar, very nice, strong. This is beautiful just to see it kind of break outside this channel, find a bullish candle, almost bullish engulfing off that above 1.06. There's a little bit of resistance where we are here again, so I think it's fair to say we could kind of draw that in. But once we move past that, which I think it looks like we are likely to do that, I think it's fair to say we've got 1.09 in our sight. So that should provide some decent opportunities. So this week, what I'm really going to be looking for, breaks above the high here Friday and some possible shorter term opportunities in this little bit of an area. Then I want to see what's going to happen once we get past it, and then I'll be looking for opportunities to the upside. Beyond that, sterling as well, the chart to kind of pay attention to here, this is just garbage. So please remember that period between Christmas and New Year's Eve, Christmas and the first week here until most of the market gets back, it's just garbage. Most people are away on holiday. Really, for real, there's very little to be gained. You should just take a break. This is something I was saying before the holidays. Here we are, we're back in. And so you could just see the market did very little during that period. And so here we've got a kind of a nice weekly bullish. It's not a very super strong, but it is bullish, but it's not super bullish. What I want to see here is a continuation to the upside. I need to see us get above that 50-period moving average. I do want to highlight here that MACD is starting to cross that from that sort of bearish territory into bullish territory. So that's quite nice. And the monthly candle so far is looking relatively nice and bullish. So all of this is hinting at that if we just follow through from last week, we're going to go high. We're going to be nice and bullish. We're going to get that weaker dollar. Look at that Australian dollar against the US dollar. Very nice and bullish there, right at the old highs. So yeah, there is resistance. However, it does appear as though there's still some room to move. So far, what I'm seeing here is the path of least resistance is to the upside for most of these majors. Kiwi dollar as well, looking good. You can see it's just settled right at a daily resistance level. That weekly bit of a doji there. Sorry, indecision candle is what I mean to say. Hanging man kind of thing, but I want to see this thing head up a little bit higher. Let's look at dollar yen. Dollar yen, very bearish candle. That's actually a double top within a downtrend. So not so conclusive on the weekly. Take away these levels just for a moment. Not so conclusive on that, but more bearish than bullish. Dollar Swissy also strong resistance that's held with a bearish candle here. This is showing more now potential moves to the downside there, and a dollar CAD as well, also looking very bearish when I look at it here in isolation, which means dollar CAD here has that potential to move down towards 1.3 over the medium term. So shorter term is next week. Medium term is maybe the next month, and then longer term maybe the next quarter. Dollar ruble, I'm just noticing we do again have more transactions happening on that. I find that interesting because I'm curious to know why we have activity after we've been in a coma for such a while. I'm sure we'll find out what the reason for that is. EURUSD as well. Look at this, just pure garbage. The reason for that really is that the only kind of transactions that are taking place on EURUSD tend to be necessary transactions as opposed to trading and investing transactions. It's just normal tourists exchanging money, businesses exchanging money, central bank operations. There's not a lot else happening there. Gold, look at this, beautiful, ladies and gentlemen, very, very nice. We spoke about this over the last month or so, looking nice and bullish. Right now there's very little to indicate that this isn't on a path back up to the old highs. Obviously it'll have pullbacks and resistance along the way. Next target for me is going to be $1,900. I'm looking for some really nice pullbacks. Absolutely, gold is going to be sitting on my watch list, looking for buying opportunities with regards to strategy. Obviously, remember, guys, that this is all about sensible risk management, small position sizes, high probability setups. Nothing is guaranteed. That's why we always have our stop losses in. And so we have to look for that. But I'll be looking for pullbacks and looking for reasons to enter on buys. Silver not as, although in principle I think it's looking bullish. I think that 24 level is going to offer some strong resistance. It'll tag along, but whereas here we had some really clear, strong signals, buy signals on silver, I'm not seeing that at this time. Which means that if I have to choose between the two, it's gold. There's no hesitation, it's gold. By the way, Usman, if you're listening, if you're watching this video, I do apologize. I couldn't do non-farm payroll. I had a prior engagement and I was catching up with a friend. I was not able to do it. I just wasn't able to do non-farm payroll. I will try and do another session this coming week, but I apologize. Copper, looking nice and bullish. Look at that, really good weekly candle right at resistance. Acknowledge that. You can see it's a support resistance level on the monthly, on the daily as well. So it's got to get through that, but that looks pretty good. Natural gas just continuing to tank right here down to these all-time lows. Not all-time lows, but historic lows at any rate. We can see here as well, West Texas crude is also starting to push down towards these old highs. I think it's fair to say that at the very least, it's targeting these old highs down here, which puts it at about the 66.40 mark, okay? So possibly even down towards the $70 mark, it's going to continue down. Why not? So this week, initially, I'm expecting this to continue down first. Moving on to Brent. So Brent, also same thing, really nice resistance level there, down towards 75. Seems like a fair move to the downside, and also there's more potential downside here, down even towards, say, the 55 mark. So yeah, so far, right now, it looks like that's where it's heading. Okay, wheat, also same thing, heading lower. Coffee, heading lower. We had coffee trying to break high, looked really good at that point. At this point, right here, failed, and so it's still range bound. So we'll see what happens with that. But man, that was looking really nice and bullish, but it needed to break out. Look at sugar taking that's a whack right off that level there. So sugar for now looking nice and bearish. Why not just continue back down towards these lows? Heavily bearish. Quite interesting there. Cotton looking nice and bullish here. So we're seeing a bit of discrepancies between the different commodities. And so this is important because it also implies that right now the markets have started to uncouple from the fear and panic that we had for a big chunk of 2022. They're starting to do their own thing. Oil's going down, gold's going up. And so the general feel from that, it isn't all, and the dollar's weakening. So it's not all about the dollar now, which it was at for several months. For 6-7 months, up until about September, October, it was just all about the dollar. So everything is kind of doing its own thing now. That's a good sign. That's not a bad sign, it's a good sign. It hints that the markets have started to relax a bit. Also means there's more trading opportunities now as well. So looking at the Dow, so I've highlighted this area as a potential kind of area of struggle for this. But I would say this, looking at the global indices, guys and girls, very nice bullish candle. We've got an uptrend on the daily, a nice little bullish breakout candle there. I want to see if this follows through. I think it should. Monthly candle so far is looking nice and bullish. It's January. In the past, when we've had kind of bearish starts to the year that kicked off right in January, right now we're looking relatively bullish. So I think, if we had a big surprise this week, we'd break down below these lows and close heavily lower. But so far, the indicators, the technical price action indications are all bullish. Same thing here, S&P looking very nice and bullish here, looks very nice and bullish there on the weekly and on the monthly so far. All of these are looking more bullish than bearish. That's quite nice. So this week, what I'll be doing is looking for breaks of Friday's high and the last weekly candle's high, and then looking for buying opportunities up to those next levels. You can just see here, that looks good as well. Bit of a triple bottom here on the Nasdaq. The Nasdaq is the weakest, but we've got clear bullish divergence here. So there are clues so far that this is attempting to turn around. And therefore wants to head higher. Let's look at the Russell 2000. Russell 2000 looking very nice and bullish here. I love the look of that. That looks really good. And then we have a look at the FTSE. The FTSE, of course, phenomenal. And I think let's just please a round of applause for the FTSE that's just gone through to all-time highs. Not something that would really happen if the global economy was in dire straits, especially after the last year. So not like we're in a bubble and we haven't had a correction. We've been through a massive major correction the whole of 2022. And the FTSE's just gone to all-time highs. That's a very positive sign. Keeping in mind, by the way, for those of you who might be new to my channel, for those of you who follow me regularly, I follow Ray Dalio, Michael Burry. We're keeping in mind, all the potentials for bigger corrections in the market. So they are being taken into account here, as well as kind of following Warren Buffett, where he's going, the last person in the world I'm taking financial advice from right now is Elon Musk. Okay, I'll follow the classics. Warren Buffett, Charlie Munger, Ray Dalio, as I said, those are the guys who know their stuff. I'm going to stick with them. This is what they do. And for most of them, they've actually made money in the last year. So I'm going to stick with them. The DAX. All right. Very nice and bullish. Look at that bullish close, guys. This is great. These are not signs of weakness. These are signs of optimism. So I'm going to follow through on that this week. I want to see the markets break, continue up to the highs, continue up. We might even have a few pullbacks. The market might pull back to these previous highs before continuing on, but that is on my watch list. That's my trading plan on most of those. Having a look at this, very nice. So this is the ASX out of Australia. I usually just call it the ASX, but this is it. Looks good, man. That's a great weekly candle. Break of the high. That should see it go back up to these highs up here. So I do think that if the market follows through, everyone's coming back, engaging in the market, there should be an increase in volume and volatility and activity. Expect to see those markets climb. Nikkei is going to be interesting to see if this level holds. It's a nice little bullish candle at the bottom of the range. There's no reason why this couldn't potentially work its way back up to the top of the range. The surprise would be, again, if a lot of these suddenly just collapse and fall through the floor, because right now, last week, considering most of the world wasn't really back at work yet and the market was already showing signs of bullishness, that would be a bit of a surprise. But so plan A, expecting the markets to strengthen this week, and signs of optimism. So one of the charts I want to talk about a little bit more is Apple. It's been slipping. If you kind of look at this as a bit of a bearish breakout pattern, which we've been talking about, the implication here could be that we could see Apple correct a little bit further. How far could it correct? Well, as far down as $100 here, so down to the 100 mark. That's quite far, but certainly down to the 120 is not outside of the realm of possibilities. So yeah. So Amazon has had a really big correction. Principally, we're at a nice level of support. Let's have a look. We've got a bit of bullish divergence creeping in here. So we've got higher lows here, lower lows. This could be a really good place for this to start to turn around. That looks nice and bullish. So this week, let's see if we can break higher. For me, where Amazon's story changes is above 100. Once we break above that, we start to look more and more like we're returning back to all-time highs. Okay, AT&T has been doing relatively well, all things considered. They're heading back into that, let's call it the danger zone. So let's see what happens. But for now, there's no reason why they shouldn't continue up. Let's have a look at ARK. So here's my thing with ARK, okay, because I'm a big fan of Cathy Woods. Here's my only concern. I feel like every time I listen to their their rationalizations about their research into why markets should do what they do, and then the markets just never do what they say it's going to do. It just kind of sounds to me like they're just really good at fabricating like a rationalization that isn't really based on reality. So this is the thing. However, having said that, obviously I want to see this stuff turn around, but they are heavily exposed in a couple of core stocks, like Tesla is one of them. So that stuff really has to turn around to see a difference here. And again, we're definitely seeing some bullish divergence. This is classic bullish divergence, creeping up higher. This is going down low. We need to start to see this stuff turning around. So if you're a volume spread analysis kind of trader, you would be looking at volume here. You'd start to look for volume spikes, increases in volume, and it moves to the upside. That would be signs it's going to start to potentially work its way around. I mean, why not now? Look at this. This stuff is like 70, 80% from the highs. These are massive discounts. And if you're a buyer and you principally believe in this, you're an investor thinking long term, that's certainly something that people would be considering, I think. Okay, let's have a look at Glencore in the UK. So they had a double top here, a bit of bearish divergence on that. Clear bearish divergence, which usually means you're going to get a bigger correction on the next higher time frame, which is the weekly. It doesn't mean the monthly is necessarily going to change. We could be coming back down here to 500, potentially in this area and turning around. So just keep an eye on that. But overall, I don't think it's necessarily that weak. Let's have a look at Tesco's. Tesco's doing very well. It's time to break up. It's got a weekly uptrend now. It just needs to get back up above that 50-period moving average. So to me, it looks as though 245, 250 is really its next challenge. That's its next level. Once it breaks above that, it's probably going to cross over the 50-period moving average. And then it's starting to look like it's going back into, let's call it a bull trend. Amex looks good. Nice and bullish here. Nice and bullish. The signs of bullishness here. Berkshire Hathaway. Wow. Bingo. So that had a really big knockdown, already back up, creating fresh highs. Back up from, there we go, going back to, wow, May. So that's good. That's already creating brand new fresh highs. That's really nice and bullish. Strong level of resistance right there. Potential breakout opportunity to the upside. Very cool. Coca-Cola is almost certainly then going to be looking good because Berkshire Hathaway and Coca-Cola are very much intertwined. This looks okay, but you can see there's a very strong level here at, let's call it 64.50. So, or if you really want to round it up, 65. But okay, let's keep an eye on that, but it's going to try and push its way up a little bit higher. BP looks okay. It started a bit of a kind of a correction back down. I was looking for it to come back and test these old highs. And if crude oils potentially do fall heavily this week, that might pull it back down. Exxon, same thing again. These are looking bullish, but this is weird behavior as well. You just got a lot of indecision candles. When I say that, open and close very close to each other, small bodies, which is not necessarily a sign of strength, if that's going to be the case. General Motors. Wow, big bounce up there. Really nice big bounce. That looks good. Series of high lows. Once we break above these, you can just see it's going to take off. So let's see if we can get back up to those old highs there. JP Morgan, looking good. Very similar to Berkshire Hathaway, breaking these highs. Looks good. Hasn't been there since. Let's see if same time, March last year. Looking good. Okay, nice and bullish. I'm loving this. Adidas. Adidas finally got a bit of a weekly uptrend there. Well done, guys. Well done. But it is heading into its danger zone, is going to be at the 154 mark. So let's see if this week can go up to that and if it can break through that. Meta is also doing well. It's closed the gap. It's got room to go all the way up. So its danger zone is 150, but it's got room to move to the upside there. Morgan Stanley. I apologize for this kind of messy patch, meaning just for people in general, you know, about how the markets can be that way. And so this looks good. Bullish candle, this side of the 50-period moving average, probably going to break higher. NVIDIA. All right, guys. So here we have a level of resistance. Very strong resistance at 190. We need to see that turn around. So I need to see this do that. And if it does it, that will be an inverse head and shoulders, which means it's a change in trend. If it can hit from here back up to those highs, it's probably going to break through. Okay, Netflix also looks good. That weekly looks good. I know there's not a lot of action going on Netflix, but that looks good. All right. PayPal. Also bottoming out. Bullish divergence. This could be it. That's good. So really they need to start, if they break above these highs, the game changes. So let's see if we can get you, especially back up here past 80, a little bit higher than that this week would be great. Spotify, same thing again, starting to turn bullish. A little bit of a bullish breakout patch over here. So I'm just going to highlight it. I'll go a little bit higher, but it's going to be somewhere in about this area. If we could break through that, then all of a sudden 90-100 is in the sights. Spider that has been in a coma. This is terrible, man. But look at that. It's very close to kind of shifting into full bullish mode. Once it sort of breaks above that midpoint on MACD, it starts to lean more bullishly. And it's had a good consolidation, which means that when it does start moving, it's going to move. All right. It's going to go from here straight to these old highs in one go. So let's see when that happens. FedEx breaking up to new highs, looking good. Still within a downtrend on the monthly. So its danger zone is 200. So when it comes back into that, we're going to have to see. And let's have a look at Tesla. Tesla gap down. So just commenting on the measurements from the high down. So I've gone from 0 up to the old highs, back down to where we are. We're sitting at, it touched 75.5% from the highs. Okay, the high to the low. So in other words, it's fallen 75.5% from all-time highs. Not only that, it's doing the opposite. It's dipping below the 0 line for the MACD, which puts it into bearish territory. So generally, if this was, forget about the name, generally if this happened with a stock or with a commodity, the chances of this recovering, this would imply that it's shifting, changing into an actual, as opposed to a correction, it's changing into a downtrend. It's becoming bearish. And remember, stocks can always go to 0. So it's going to be interesting to see what happens here because, look, if that's a relatively nice gap down and a close up. That's not necessarily, that could be a potential bullish signal. But there's so much work that this has to do. It's going to have to work its way back up to 125. Then it's got to break through that. Where I become very bullish on this is sort of kind of above that 200 level. That looks good. Once we get back up above that, which is here, we start to probably return back to those all-time highs. However, what I was going to say is that if you chose to see this, if we just kind of enlarge this, and you chose to see this as a potential head and shoulders pattern, because sometimes you do get that. If you chose to see that as the right shoulder, then that would be your neckline. You'd have a big correction down. If you choose to see this as your neckline, you've got a big correction down. If you want to consider that a head and shoulders pattern, and head and shoulders patterns have like an 82% success rate, and if this is one of those, we would see a correction here right down, like down to $60 if that's going to be the case. So it's very interesting. What do I need to see? Remember, the weekly is key. The weekly is key. When you go above the 50-period moving average, the red 50-period moving average, you are generally in a bull trend. We're not there yet. In order to see that being the case, I'd really have to see that shift back up to the upside. I need to see it break this bearish trend to the downside. Not the trend line, just that line in the sand. I need to see it break above that. So it's got a way to go to do that. And right now, it's faring worse than a lot of other stocks when it's supposed to be so-called. It's like a so-called sort of prodigy type of better product. Should be doing better than that, man. I'm not impressed. I'm a shareholder. I'm not impressed. Okay, Vanguard. Again, potential head and shoulders here. That's a higher low. Looks really nice and bullish. I expect that to push higher this week. Looks good. Vanguard. Sorry, we're on Vanguard. Okay, let's move on to bonds. Bonds are looking really nice. I'm very happy to see this. It's starting to look nice and bullish. I see that as a good sign. I don't see that as a bad sign. I see that as a good sign. If we could break above these highs, we'll start to see a bit of a correction, and some kind of an interest in bonds to me is not necessarily a bad thing. Let's have a look at the Eurobond. That's had a big bounce to the upside with bullish divergence. All of this, that looks like that might very well be turning around. And there's some, we might in the medium term, as I said, that's monthly, we might start to see that, that's weekly. That short term is over the next week, medium term over the next month, we might start to see this hit up a little bit higher. Sorry, I'm a bit rusty. I haven't done this for like 3 weeks. Cryptos have fared well. So I have to say this. Cryptos have fared really well. I always say to own it, that cryptos are integrated, joined at the hips with equities, and they really are. However, where some of the equities took a bit of a hit over the Christmas silly season, cryptos didn't. They were fine. It's either because they were all sold off already, doesn't matter. I'm not going to overthink it, but they did well. So I'm very happy to see that. So this is what I'm looking for this week. They've got some slightly higher lows. They're just low volume. They're just kind of low energy. I want to see those pick up energy and break up above that. But if we have a great week, we could see Bitcoins head up to 18,000. We could see that head up to 18,000. Ethereum, we could see that work its way up. A little bit of level of resistance here back up to these highs. Solana looking good. They all got bullish divergence. They all have bullish divergence. They all have a lot of potential here to head higher for the most part. And I'm expecting that this week. I would say this week, plan A, because I only do it a week at a time. I would expect them to move a little bit higher. And don't worry about this one. This last chart is really me just waiting for it. This is a bit of a Titanic, just looking for that to hit the bottom. Not really expecting much from that. Okay, so there we go. Just to recap, so we're 25 minutes in. I don't want these to be too long. That's good. There's some good trading opportunities this week. Again, it's always about risk management. You know, plan your trade your plan, keep your risk under control, always trade with a stop loss, always take profits. And looking at this overall, the markets look nice and bullish. They're looking optimistic. It is January 2023 to be fair. And there looks to me to be some good opportunities on on gold, some of those majors against the US dollar. The US indices, wow, the UK DAX as well, also looking phenomenal in terms of potential buying opportunities in terms of those, if you've got your strategy built around that, trading with a trend. Cryptos are looking potentially bullish to the upside. Bonds also looking a little bit optimistic as well. And then we're going to see how those individual equities cope over the coming week. But a lot of them are showing green shoots, which is very, very nice. And they wouldn't be doing that. I was talking on the tail end last year. We got that very bearish engulfing candle on the weekly chart, and I was kind of like, that's very unusual. That doesn't belong here. I'm surprised it shouldn't be here. We were looking for correction, and we got this very bearish engulfing candle, and we recovered from that. That's a good sign. If we were truly, truly weak, the markets would have just tanked. They really would have just tanked in that last bit, but they didn't. They managed to hold on these levels of support and managed to push back up. So that is very good. When I look back through that now, I see that as, there's no guarantee. When we look at price action as technical traders, when we see a setup, we know that the probabilities of it following through are very high, but it's never guaranteed. And this is a great example of that, where that setup didn't fit within the overall picture. Prior to that candle, everything was looking really bullish. Then we get a heavily bearish candle, which was a surprise out of nowhere, considering we've had a very bearish period before that. So I know that you go from a heavily bearish period to a bullish period, which takes a long time to get to that stage. Then suddenly you get a very bearish reaction again. That doesn't really make sense. Anyway, the market seems to have held through that and pushing back. So that's a great example of where you get a signal which doesn't follow through. So this is a great example of, if it's a 70% chance of following through, this is that 30% where it appeared not to follow through on that. So again, I'd be surprised if we suddenly get a heavily bearish signal again. Then the market is really in a struggle. Okay, so for now, I'm optimistic. I'm looking for the markets to recover this week. Let's see how it plays out. Obviously, no guarantees. We look to see it. But right now, the signs of this look good. Plan A, trading with optimism. And on that note, ladies and gents, I want to wish you the very best in 2023. And I look forward to lots more, all your successes and obviously successes in engaging in the financial markets sensibly. Thank you very much.